Thank you everyone for joining us today. We have people continuing to dial in, so we may leave this a few more minutes before we actually start. I might do some introductions first. For those of you that are with us, yes, you're in the right place. This is the new Leading Climate Ideas webinar series, number 2 in our series. Last week, we featured an interview I did with Dr. Marjun, an old friend of Nick Robbins and myself, who is leading the China Green Finance Committee and working around the world on sustainable finance. Today, I'm incredibly lucky to have 2 very good friends, Nick Robbins and Helena Viñes Fiestas, who are both alumni, if you like, alumnus, however you pronounce that word, who have come out of the European expert group process. Nick and I had the privilege to serve on the high-level expert group on sustainable finance a couple of years ago now, which led to a report which led to the EU Action Plan and led to the second group, the EU Technical Expert Group on Sustainable Finance, that Helena and I have been toiling away on for more than 18 months now. Helena is the Deputy Global Head of Stewardship and Policy at BNP Paribas Asset Management, with sort of a bit over $500 billion or euros of investments on assets under management. So a very reasonably sized asset manager. And Nick started off, well, when I met him in that world, working in asset management, again on the sustainability side, has done a stint at HSBC and then the landmark United Nations Environment Programme inquiry into design of sustainable financial markets, one of the longest organisational titles in history. And now he's at the Grantham Centre at London School of Economics as a professor in practice. Thank you, Nick and Helena, for joining us today. This is a conversation on the topic of taxonomy and the broader sustainable finance revolution that we've been experiencing and what's coming next. You are welcome to ask questions using the Q&A button that you can find in your controls, all in text, and we'll pick up a few as we go. We've been running a series of webinars on the European Union taxonomy. If you want to find out more, go to www.climatebonds.net/webinars. Recordings of all the past ones on there and the list of upcoming ones. Helena and I have spoken on a couple now, plus she's been doing other language webinars, and you'll get a lot of information about what's in the taxonomy. That is not what we're going to talk about today, just so you know. We are living in a time of crisis. Now, we had a crisis going last year around climate change, but now we have the COVID crisis with dramatic and significant impact on the lives of citizens right across the planet. This is an extraordinarily global crisis that's underway at the moment. And if you are lucky enough to have friends in other countries, you'll no doubt be experiencing stories of lockdown from California to South Africa to Singapore to Paris. This is an unusual, in a sense, a kind of globally melding crisis in that particular fashion, given the shared experience of the species, the human species involved in here. This is not a crisis unrelated to environmental issues. We now know very clearly that the pathogens have been involved jumped from a stressed colony of bats in southern China as a result of environmental degradation. The IPCC Health Committee and the World Health Organization have been predicting for 20 years now that we can expect to experience a century of pandemics as part of a cluster of climate shocks that we're going to have with 2-degree warming. If we're into 4 and 6 degrees warming, which we're in a race to stop, then it's a whole different game. So this is pretty well baked in to our climate change now. This particular one has clearly got environmental roots to it. Most of the things we experience this century as shocks, we will not recognize as climate. They will be storm surge, they will be fires, there'll be the flooding of the Danube and the Elbe, dramatic floods. These are things that are predicted. It'll be pestilence associated with it, and it'll be wars. The Syrian War, President Obama had described in a major speech, is a climate war because of the environmental stresses related that led to the conflict and led to the challenges for Syria, and so on and so on. So as we are experiencing this particular crisis, we need to be conscious of two things. One is, as we rebuild, we need to understand the kinds of things we have to rebuild to ensure we can survive future crises. Yes, a resilient and redundant health system, a health system that can be scaled up quickly for redundant capacity, is a climate resilience investment, not just one that we all need for the social good. It links across. Yes, social protection measures are critical for us to be able to navigate crises. We cannot have a situation where the most vulnerable and the most poor can't afford to go to a doctor because they don't have any kind of health coverage and they have to pay out and therefore keep working while sick during a pandemic. This is how you ensure that a pandemic spreads. And of course, the impact of that has been high, especially high rates of mortality amongst frontline workers like cleaners and hospitality workers and nurses and so on. So these are lessons to be learned. And as we come out of that, the other lesson is we must work to inoculate against future crises. Climate change, or rather mitigation, getting emissions down by 50% in 10 years, which is a very clear IPCC 1.5 degree report statement of what we must do to avoid catastrophic climate change, is inoculation against future crises, extreme crises. Because if we don't do that, things are getting a whole lot worse this century. So that's the background of where we're in now. Let's now turn to my friends on the call and start discussing what you're seeing happening now, other thoughts about this, and where we're getting to in terms of the sustainable finance revolution we're in. Helena, maybe I can start with you to tell me your thoughts. You've been in the midst, you like me, have had your head down on a table working on taxonomy for 18 months. We're now coming up for air. The taxonomy is out there, coming into regulation in the European Union in the near future and having a global influence. What are your thoughts about the impact of that, the relationship to the crisis and the development of sustainable finance? Get us started.
First of all, good afternoon to everyone, and thank you, Sean, for inviting me to your webinar. So I'll start by talking about actually how, as you mentioned, the taxonomy has not even come into force and already is having a pretty big impact. I think that when we started almost 2 years ago working on the taxonomy, we couldn't have imagined the extent to which the taxonomy is a real game changer. What we're seeing now is investors like ourselves already working on the taxonomy and implementing the taxonomy. We have the PRI taxonomy practitioners groups. We have banks working on it. Think about the Unified Taxonomy Banking Group that is looking at how you can apply the taxonomy to banking products. We have companies like Acciona and others already reporting on it, sell-side analysts looking at whether or not there are correlations between financial performance and exposure to taxonomy eligibility activities and so forth. But I really want to touch on a couple of points today. The first one is that probably the most exciting areas of development for the taxonomy is the debate today, and shall I say almost official debate, about what role the taxonomy could play in the public sector, and particularly in public finance. I mean, and I say official debate because it is part of the renewed sustainable finance strategy that the Commission has put out, the consultation, and at the same time is part of the whole debate around should the recovery be green, and if so, should the green be defined by the taxonomy? So on the first one, I would say that the debate is about to what extent the taxonomy should be part of green procurement, green spending, and also the European level going beyond the EU investment the program and looking at structural funds. You know, what should the taxonomy be part of that? Now, the other discussion is around state aid rules, which is what is really timing and what it is the discussion about today. And I would say, and as you know, we the tech, we put together a declaration or a statement, you know, saying that we think that the recovery should, at the very minimum, take into account the do no significant harm principle, in the sense that it cannot harm or go deeper on the environmental challenges that we face, but when is appropriate, that means for the sectors for which we have a taxonomy, the taxonomy should be, you know, that sort of driver. And if I may, very quickly, I want to point out, bringing it home and meaning home the investment community. You know, I think the taxonomy has made two profound changes or impacts. The first one is that it has demonstrated that the current ESG approach is not sufficient. It's not to say that the ESG integration approach is not valid. It's very valid, but it's process-based. And now we're moving to a phase where we need to really capture the impact of our investment decisions and that contribution to overall environmental social goals. The second point I want to make, and this is going to sound familiar to you, Sean, is the extent to which the taxonomy is changing the concept and the assumptions we make about the transition and what is transitioning. I mean, as you know, the taxonomy is framed under two big pillars. The first one is environmental goals, right? So when it comes to climate and mitigation, it is that 1.5 degrees that you just defined, carbon neutrality by 2050. The second pillar, and this is really important, is it's science. And you just said it. What science is telling us, what the scientists are telling us, is that, hello, we need to reduce by 50% global emissions, and this is the heartbeat, the transition to a low carbon economy will involve the face-off of some activities, such as unabated fossil fuel-based power generation. And that's really hard to swallow. But little by little, thanks to the taxonomy, we are starting to really acknowledge this. And I'll just finish very quickly, because I cannot help, as a Spaniard, to mention this. As we speak, the Spanish government is presenting to the parliament the new energy transition, the climate law in Spain. And you know what that draft contains? It contains 100% renewable electricity system by 2050, bans all new coal, oil and gas extraction projects with immediate effect, ends fossil fuel subsidies, and makes new vehicle emissions free by 2040. I mean, of course, it needs to be approved. That's a different debate. But that's what the Spanish government is presenting right now. I mean, doesn't it mirror, you know, that procurement plan that you talk about for 2050?
It's the taxonomy exemplified in government policy. That is fantastic to know that that's happening. We'll come back to you later about what you think about the chances of getting through the parliament. But I'm sure they wouldn't have introduced it if they didn't think they could get it through. I'm going to say they've got enough problems on their plate without putting out vexatious legislation. So that's extraordinary. I mean, for our international listeners, it's worth noting that the European Commission has just reiterated a €2 trillion green stimulus and green investment plan. Now, linking that to the taxonomy becomes something very powerful if we can make it work. But I guess there's a question of, can we make this work? Nick, from your perspective, you use this line about the taxonomy. Can I bring you in here now? You've been out of this process for a while, looking from above like an eagle. What's your thought now about whether this is really going to work, whether it can work?
Well, thanks, Sean, and it's great to have so many people on the line for this conversation. I mean, I think what is really extraordinary, to build on a phrase you used earlier in your introductory remarks, Sean, is that we need to sort of inoculate ourselves against future catastrophic impacts of climate change, and we do that through mitigation and exactly the measures that Helena has set out Spain is undertaking today. I mean, at the moment, we don't have a vaccine for COVID. I hope we get it as soon as possible. However, we do have the equivalent vaccines for tackling climate change. We know what we need to do. And this is what I think the extraordinary achievement to you and your colleagues and the Commission and so on of the taxonomy is we now have a very evidence-based framework for knowing how we should be allocating capital to achieve priority environmental goals, mitigation and adaptation. And in many ways, I see this as the sort of end of the Alice in Wonderland phase of sustainable finance. I mean, many of you will be homeschooling, but there's a part of Alice in Wonderland, that children's book, where a character called Humpty Dumpty says that when I use a word, it means whatever I want it to mean. And I think really up until now, we've had a lot of subjectivity in sustainable finance. But for these critical areas around climate, there is a very, very clear evidence-based, outcomes-based definition about what different parts of the economy are. So that's a great achievement. And therefore, it's exactly the sort of thing that R&D should have been put in people's brains and so on, huge amounts, which puts us in a good position now. A good position now, because the taxonomy really does enable us to channel recovery plans, notably here in the European Union, but it's something that actually has a lot of resonance around the world. So I think as governments are thinking about their recovery plans, and I think that's what's been most remarkable over the last month, is the sort of consistency and beginning of consensus from the UN Secretary General, the President of the European Commission, the head of the International Energy Agency, leading investors, banks, corporates, civil society, and so on. A very, very clear consensus about Build Back Better. And we have, in a sense, the guide about where particular sort of public funding should be allocated. So I think it's a great achievement.
So if we take it forward, you talk about 4 principles going forward using this, which I'm very intrigued by, about how we manage the recovery, how we do this. Now that we've got this global sense of we have to recover, and in many countries, let's face it, it's not all countries, Build Back Better is part of the narrative. Certainly in Europe it is, and I think in China and ASEAN, we're seeing a lot of that at the moment as well. What does it look like? Tell us about these 4 principles of yours, Nick.
Yeah, maybe if I could take a step back in time, if I may. The last crisis, global financial crisis, I was actually working at HSBC, and we started to identify that a lot of governments were introducing fiscal stimulus plans, and we started counting. And in a very vague sense, we didn't have a taxonomy, actually started saying what is green and what is not. And we estimated around 16% was green. China had a large proportion, South Korea, and the US. Now, 84% was not green. And I think one of the things now that we have the Paris Agreement, now we have the Sustainable Development Goals, and now we have the taxonomy, it's very clear that all the recovery plans need to be aligned with the Paris Agreement. In fact, that's what we need to do in terms of Article 2.1c of the Paris Agreement. And that we should be allocating specific funds towards, let's say, green activities. So principle number 1 is it needs to be future focused. The recovery plan needs to be focused on the recovery, on the economy we need in the future, not where we come from. In fact, we don't want to go back, because there were many problems. It was highly risky, highly unequal, highly resource intensive, highly polluting. So actually, we need to be future focused, and it needs to be aligned. There will be, and there have been, allocations toward, let's say, high carbon sectors. I think there's a very clear recognition that this needs to be conditional. One thought that could be made is, as part of any funding for high carbon sectors, that actually the company would change its articles of association to actually make the pursuit of the Paris Agreement actually part of the goal of the company, and actually you'd have very clear conditionality and pathways to net.
So do you just mean in terms of the corporate strategy, like someone like Shell is doing now, or do you mean something more substantive?
In the sort of the articles of the company, what the company is about. This is an idea I borrowed from Natasha Landell-Mills at Saracen. But I think in terms of making sure that this funding comes with not just conditions, but actually objectives.
Great point. Helena, what do you think? You're managing a lot of investments.
I fully agree that there are going to be some strings attached. I mean, we need to think about picking up on Nick's point about the last crisis. On the last crisis, when we think about there were very little to no strings attached. When we think about the bailout to General Motors, for instance, there was a little bit of like clean a little bit your fleet, but basically it was a minimum. Yeah, we can no longer afford that. I mean, this is the needs today are much, much bigger. And I think that I agree with Nick. It is about transforming the business. For me, it is about what is their transition plan. Very interesting. Yesterday, there was, I don't know if you saw it, but following on the EC announcement of the 500 billion for the recovery, Germany and France put out a sort of like a statement and proposal with the minimum, yeah? And some of the things that we're talking about was the need to revisit the 2030 targets, you know, also to strengthen carbon markets and so forth. But one thing that I thought it was really interesting is that they said we need roadmaps for sectors, right. And those roadmaps need to be applied on the recovery. And we know what those roadmaps are when it comes to climate mitigation for some sectors. For at least, you know, we have a taxonomy for 93% of our carbon emissions. Yet we maybe not have for all of them, but we have for, you know, quite a few. So how can we link that? I also wanted to make another point. It is about transforming the business. It is about also transforming the governance structure. I mean, now governments are going to, not all industries and all companies, but for some of the companies, they're going to bail out. They're going to basically, the level of intervention of the states are going to be higher. Are they going to be responsible shareholders? Are they going to really push, you know? And what is going to be the response of the rest of the shareholders? We need to start aligning both. And I think that the role of the state as it intervenes these companies is to really realign the corporate purpose and the core, you know, to transition, but also to restructure the governance. It's very interesting on the EC action plan on sustainable finance. The 10th point that everyone always forgets. It's precisely about that. It's about how do we, you know, get governance, how do we reinforce, strengthen governance to have sustainability at the very core. And some of the things that it proposes is not only around remuneration, but also about, you know, shouldn't there be at the very least one independent director with real knowledge on climate change or other sustainability issues, you know? And there are many, many proposals really interesting on how to strengthen the governance of companies to make it much, much more sustainable. I would just like to add one last thing, which is, this is also social crisis. I mean, this is a social crisis, but the climate crisis, it's also social crisis. So isn't this the best opportunity as governments intervene companies to force them also to, while they transform the business, to make sure that on their restructuring plans, they include retraining, reskilling of workers, you know, and what is, you know, and a plan for those workers that might lose their jobs, you know, cannot they be retrained? Cannot be that part of the conditionality?
And we've seen some conditionality already, haven't we, with the French government and the KLM Air France bailouts.
Air France, very interesting to have to cut in, I mean, by half all domestic flights. And it's really interesting because I was reading how actually the airlines, when you look at it from a global perspective, over the last years, the majority of the free cash flow over the past decade has been spent on share bags.
Yes, and yet now they're asking for bailouts.
And now they're asking. So I think it is time, you know, even if it's out of gratitude, yeah, and good manners, that, you know, companies start paying back to society.
But the French government requirement was, in a sense, the beginnings of a sectoral transition plan. For example, a huge amount of aviation emissions come from short haul. So they want to bolster the TGV system, the railway system, which is low carbon transport, and they want to reduce emissions, which is one of the biggest slice emissions, for short haul aviation as part of it. But you're not going to be able to do that with a free market. But now that we've got a state-owned or a state-directed airline, we can start taking the macro picture, right?
Exactly. And if I can quickly add 2 points. One is that at the very beginning, we said that maybe this transition means the phase out of some economic activities. Well, do we really need short flights? What is the length of a flight? you know,
Yeah.
that we should, you know, maybe, you know, like maybe we should ban them, or they will disappear, and we need to really foster train. So I fully agree with what you just said. And I had a second thought and I just forgot.
Nick, you mentioned that in the bailout, you mentioned to me that in the bailout of 2008, you thought at HSBC some 16% of expenditures was going towards green, which is very disappointing, but sort of high given how orthodox that bailout was. And we now need to shift to 100%. Do you think we can get to 100%? Is that realistic?
Well, I mean, I think 100% being aligned. So I think it's in a sense it's the do no harm, because I think that's it doesn't have to all be in sort of the sort of aligned taxonomy sectors, but we need to make sure, I think as Helena was saying earlier, that actually we're not actually worsening the problem. So I think this is the aviation point, and I think this idea of set of roadmaps is very important, because that's where let's say aviation, oil and gas, North Sea oil and gas, and so on, where there are going to be both the sort of the technology targets, the restructuring, but that's where you can bring in just transition plans, particularly in terms of reskilling and restructuring and so on, and involving the people whose lives are going to be effective in those choices. So I think that sector focus is a very good way of doing that. Yeah.
And I just want to, just before we lose principle one, introducing Paris Agreement goals into the actual objectives of corporations, pretty amazing. Helena saying a director responsible for these kinds of issues, I think is what you're saying. And that was actually something that was in the H-Leg report too. We talked about that, Nick.
Well, yes, and also I think building on what Helena was saying, I think what is very, very clear is that the economic shock that has been caused across the economy is leading to real concerns about private sector debt. Well, maybe we'll get on to public sector debt later on, but private sector debt. And I think there is a concern about taking on more private sector debt, particularly SMEs, I think are reluctant, I think, and so on. So I think there's increasing discussion about the way in which governments, as they stimulate the economy, can take equity stakes. So not just necessarily in the negative side, but also in positive investment. And that does lead to governance decisions. So essentially, if countries don't have them already, we are going to be building up de facto sovereign wealth funds by taking these stakes. And clearly, those governance positions, clearly we want them to be governments to be not meddling from a political point of view, but actually sending very, very clear governance expectations around net zero, around human capital management, and so on and so forth. So that's an area which I think is particularly interesting, and does enable the state also to share in any upsides that the restructuring does allow.
Very interesting point. Your second principle, Nick.
Yeah, well, I suppose this is the more obvious one, which is actually that the recovery plan should be particularly targeted around tackling major environmental challenges, not just because that is green, but also because many of these options have very high economic multipliers. Yep. So actually they can be deployed very quickly. Things like renewable infrastructure or building retrofit, they can be deployed relatively quickly. They have high labor content and actually don't necessarily require large degrees of imports. So they're very good for an economic stimulus. So I think that's the second one, is you probably could therefore direct, using the taxonomy, the framework that there, deliberately into particular areas to accelerate the transition that is underway, but to accelerate that as we go on. So all has to be aligned, but then the second one is to really focus on these particular sectors. And we know the costs are cheaper, and actually that we have a far greater sense of what needs to happen. Perhaps one area I think that of a particular focus would be buildings, and that's where the financial sector has particular relevance, on the banking side, on sort of more housing finance and so on. I think there are innovations that could be done about not just looking at buildings and housing sort of improvements through a green lens, but wrapping in high-speed broadband and so on. So actually, if we are going to be changing behaviorally to more working at home, your house does not just become sort of cozy, cheap to run, but also hyper efficient if you are going to need to be working at home and so on.
So you've got the whole building sector. You've got, thank you for bringing in the IT. In China, there's a new infrastructure policy that's just been launched with, I think it's $1 trillion of allocation. It's a large budget anyway. And they've been focusing, amongst other things, on things like connectivity as part of that, which we know from a webinar we did a couple of weeks ago with about our ICT criteria of Telefonica, leads to amazing reductions in emissions out of that sector. We've got the land use sector, reforestation. I know a bunch of companies in California have got a 1 trillion tree policy. Many governments have got these. The president of Colombia has a tree planting policy. These need to be understood as jobs creation and green stimulus projects and so on. So there's a lot really we can do, because we're going to have to create a lot of relatively low skilled jobs fast, especially the collapse of hospitality and service industries. Helena, is this something you've been thinking about in your strategizing for BNP Paribas Asset Management in terms of making sure the portfolio can remain sustainable?
So what we are actually working on, let's start by what we have been working on over the past 2 years, so not recently. And actually, I didn't know you were going to ask me, but I happen to have. I don't know if you guys can have it. And Nick knows it. This is the Global Sustainability Strategy. Yeah, this is our roadmap.
It's a great report.
Roadmap on sustainability of what we're going to do. And what we did is that we're going to draw our roadmap from 2019 to 2022. And for that, we're going to have 2 parts or 2 types of different goals or targets. First, we're going to look at, I don't know if you can see it, yeah, to all the principles of responsible investment. And for each one of them, we're going to say what we're going to do, what's going to be our target. This is more process-based. This is more about how, the coverage of our ESG policies, the coverage of our stewardship activities and so forth. But then what for me is the most exciting part, not that I've been involved in that one, is exactly this one, which is the roadmap on sustainability, which is based on the future economy. So now we believe that the future economy should be based on 3 pillars: energy transition, environmental sustainability, and equality. Yeah, we call it the 3 E's. These 2 are based on the 6 EU environmental objectives, already thinking about the taxonomy. Yeah, and for each one of them, we set up a specific sort of targets and objectives. So this is what we've been working on for over the past, I would say, the last 3 years. Yeah. So this is like massive, massive work. In terms of the crisis, we're responding. The bank is taking leadership. It's been donating and implementing or giving a lot of, I think it is over 20 million for the time being, but also working around COVID bonds and other type of measures. So there's the long-term, medium-term that was already in place, reaction, and then more of an immediate reaction on how we can work and collaborate, within this the current crisis. And of course, last but not least, very importantly, even before the taxonomy regulation was approved, we committed, and I don't know if you can see it here, to start monitoring our investments using our assets under management, so all our investments using the taxonomy to the extent that we can. And we really look forward to that. We even preview that when we can't, we will use a brown taxonomy one day, there's a brown taxonomy, otherwise we will create our own type of brown taxonomy.
And we have 50 asset managers working with the principles for responsible investment on doing the same at the moment, right? So this
exactly, that's the practitioners group of the PRI that was mentioned at the beginning, who are looking at how they can implement the taxonomy.
So the question now is, can we refine that agenda into the high multiplier area sectors that Nick's talking about in the immediate term, so we can mix recovery with green stimulus effectively? Is that an agenda amongst asset owners and asset managers now? Is there discussion about that, or has that something yet to begin?
I think it's something to begin. I think that what is very interesting and probably yet it hasn't, how to say, it hasn't been accepted or fully understood by the industry is that the taxonomy also states the transition path for the activities that it covers. I think that there's a lot of people that still think that when it comes to the transition trajectories for sectors and for companies, the taxonomy doesn't really deal with that. I think there hasn't been a full understanding of that, and a little bit more work needs to be done. But if you're talking about what I think in terms of some of the lessons from the crisis for the asset owners, so pension funds, insurance firms, you know, and some of the investors, I think there are three key lessons from my perspective. The first one is that we have been and we are incapable of addressing systemic risk. I mean, we keep talking and talking about pricing systemic risks. Yeah, we need to price systemic risks, integrate them, and that's it. So there's almost like this idea, this belief that there is out there a single pricing mechanism that we can just apply, yeah, and automatically it's going to give us the results. So we're hands off. We don't really need to understand all the environmental challenges or the impacts in the real assets. Yeah, and let's be honest, that maybe one day in the future, but it's just not happening. The closest we're getting to that is carbon price, yeah? And let's be honest as well, we're so far away from having a meaningful carbon price or a global carbon price. So the question is, can we afford to wait? And I think the answer, we know which one it is not. So unfortunately, it requires more effort. And that more effort means that we need to understand the challenges, and we need to understand the impact of our investment decisions and of our operations in real assets and the real economy. And guess what helps you to do that? The taxonomy. The taxonomy is a market tool for that. So that would be one. The second one, and it's in the same lines, is that what is clear is that we need a systems approach. Yeah, it's no longer enough to look at one fund. Okay, what I'm going to do with this fund. As a pension fund, as an insurance, you need to look at the entire allocation of capital from a system approach. Yeah, and guess what? It can help you to do that. The taxonomy, as you say over and over, Sean. So you know that I pay attention to what you say. The taxonomy is like a procurement plan for 2050. Yeah. So that procurement plan has also to be that sort of like map that helps that to allocate capital and the entire. And the last point I want to make, and I know I have touched a little bit on that before, is that private sector and pension funds particularly, and asset owners needs to start working more closely with the public sector. And by public sector, I really mean working more towards social and environmental goals. First, yes, there's going to be massive public funding, but public funding is not going to do it alone. Let's be honest, no matter how much we're talking about, yeah? So we need private funding to go into that. There's in some areas that with incentives and all the changes, they will shift naturally. But others that won't, we need to be more innovative. We need to move into the blended finance space. And we need asset owners to do that. The second point I wanted to make is I was referring about this increased level of state ownership, yeah? So we're going to have some sort of like share ownership type of structures. Well, what does mean for the companies? I fully agree with the points Nick made, but what does it mean to the other owners, yeah? And I think those other owners also have a very important role to play. And asset owners in generally, with notable exceptions, have not been so active on stewardship, yeah? I think they need to really engage, and they need to use their vote, and they need to do it in a way that is coherent with those overall environmental and social goals. At the end of the day, what we're talking about, what the taxonomy does, as I said, and something unique of the taxonomy is that it's coherent with environmental goals, and hopefully in the future we'll have a social taxonomy that will be coherent with social goals. So basically, for the first time, we have a tool that aligns financial with environmental and social goals. And that's what it is, whether you use it for your stewardship activities or whether you use it for capital allocation.
Nick, I think that's a segue back to your third principle.
Well, it is, but it's just telepathy. It's not. We haven't pre-planned it. I'm finding that T-mail is very, very helpful. Telepathic mail. It's very good. It stops all the surveillance by various spy agencies. So yes, I mean, I think if we talked about some of these principles, and I think we're building on them. So the first has to be aligned. Secondly, targeted on these high multiplier green activities, and third is inclusive. And I think Helena, you said that very well about that. I mean, again, the good thing about taxonomy is that social is inside. I mean, that it actually isn't. I think that was a great achievement of the TEG group. So there are very clear commitments to upholding good international practice around human rights, around multinational enterprise guidelines, and so on. But these, I suppose, are designed, I suppose, as minimum standards. They are to prevent sort of harm and to particularly focus on the risk, on the risk side. I think as we go into the recovery, particularly where we are looking at deploying public capital, I mean, we are going to be having to think a lot about generating as much social benefit out of this recovery spending. So Helena and BNP Paribas are one of the signatories of work we've done with the PRI and the ITUC and Harvard on just transition. Mm-hmm. And in the work we've been doing, increasingly, we've been seeing sort of the just transition as climate action with positive social impact. So actually, yes, we need to think about looking after, but sort of focusing on those sectors or workers or communities that could be vulnerable to the change, but also using this process to generate positive social impact. So I think that's an area of real interest. So for example, we may come on to this later, this is the moment for sovereign bonds. There's huge issuance of sovereign bonds to pay for the rescue phase and so on. We have this very positive development around green sovereign bonds, but it'd be very interesting to add to the green sovereign bonds, not in terms of a compliance factor, but actually an insight factor of the social impact of the spending of those, particularly in a recovery phase. You spend money on building retrofit, let's say, through a green sovereign bond, or on renewables or public transport. It'd be very interesting to actually measure the social impacts that come out of that in terms of low-income housing, in terms of job creation, quality of work, community benefit, and so on. So I think there's a sort of interesting sort of next stage to be done, which I'm sure investors and governments could work together on.
A very interesting point. I mean, we've seen a phenomenon of COVID bond issuance during the crisis. There's more than 300 issued already, including the Austrian government recently doing a sovereign. So one thing that's clear is the idea of the thematic bond is well and truly established.
That's right.
Which comes with some conditions. And the conditions do require reporting on how you use the proceeds. That there is a level of transparency linking to social or environmental goals that's implicit in this. So I guess that's an amazing dividend of the last 5 years or 6 years of growth of the green bond and the other markets into COVID, and then recovery and resilience bonds, which we expect to see coming in the future.
Yeah, and I think maybe to build on that, particularly that we have used unprecedented amounts of public money to stabilize the economy, and there'll be probably far more funding to come. And we need to make sure that this money actually does do what we're planning, what we hope it's going to do in terms of stimulate the economy and achieve these environmental social goals. And one of the weaknesses last time in the fiscal crisis is governments often announce things, but then they're very poor at actually following up with the implementation and the reporting. And one of the things, particularly around these green or social sovereign bonds, is that there is a ready-made reporting framework. So I think in terms of the sort of accountability and in many ways the value for money through these sovereign bonds, actually the sort of the framework that they've been established on the green bond area is a sort of ready-made tool, I think, for ensuring that.
By the way, Helena, some people are asking for a link to your reports. You should put it into the Q&A function while you're on, so people can download.
Oh, I am so terrible at this. Yeah, I'll send it to you. I'll send it to you. Yeah, because then I can send it from them.
Nick, you're in your inclusive strategy. When we were talking about this earlier, you talked about the protection provisions, the sector transition plans. You also talked about places left behind, which is something that we haven't given a lot of attention to, But in some ways, the populist revolutions of the last few years have forced us to try and consider this issue. So is that simply a matter of allocating jobs to create public sector jobs in Lodz or in southern France, or is this more sophisticated? What do you mean by that?
Well, I think one of the sort of downsides of globalization was, in a sense, the erosion of place. Yes, we built an efficient global economy, but I think one of the concerns is that you have places, regions that are left behind. And so I think in the recovery, we're not thinking about sort of welfare payments, but actually building up sort of self-sustaining economies, which actually grow from bottom up. In the EU, you have a sort of an approach called smart specialization. Again, that will need financial architecture. Many countries have an ability for local public finance. The muni bond market, but again, the green bonds has been a great success. Some countries don't. So again, thinking about that decentralized public finance framework. We also may need sort of more decentralized financial institutions, anchor institutions that actually that are committed to particular regions. Again, in Germany, you have state-based Landesbanken and so on. So I think one of these things, let's say my country, I think you'll need to be thinking about that sort of decentralization of finance in terms of maybe a muni bond market, more sort of regionally based financial institutions, and also connection between people's savings and their sort of desire to connect. They obviously want their pensions to be aligned with their values and sustainability, but I think they also want to contribute to action in their communities. So I think local financing strategies there, maybe through digital plans as well.
So this is the recovery. This is starting up again of targeted policy institutions, or maybe intermediary institutions like municipal finance authorities in Sweden and the US. But you're saying more than that, right? You're saying that actually the linkage of capital to purpose, which is implied by this massive growth of thematic issuance, green bonds and COVID bonds, can become the norm for local retail as well, and local savings. And that's this is something that we've seen a lot of discussion in the green retail products, and also in Islamic finance, where, of course, the basic principle of Islamic finance is that you need to be showing how you're contributing to the community. Not always followed as well as it could be, but this is a principle we should be applying everywhere, I think, is what you're telling me, and can now.
No, that's right, exactly, and I think it's necessary because our economies pre-crisis have had a tendency to sort of focus on concentration in metropolitan areas, and I think sort of alongside other crises, that is a crisis. We have a sort of spatial crisis as well, and again, we have mechanisms. Again, I think this is where digital platforms can be useful in terms of providing new forms of financing at the local level.
So the last of your four principles is about global collaboration. And I want to tease that out a little bit. I mean, clearly one of the things we're learning the hard way with pandemics is that it's better to collaborate than not to collaborate. Not that all governments have quite learnt that lesson, I will admit. There are still a few holding out on this issue. But sharing knowledge, sharing resources, we've done quite poorly in some of this global collaboration, shifting around protective gear from places that have surpluses to places who have not been able to organise themselves to actually produce any locally, for example, is not something we've done well. We're about to have a test of global collaboration with vaccines whenever they come in sometime in the next year, because it'll be necessary for us to ensure that we don't just restrict it to the rich and so on. What are the other things you're thinking about when you think about global collaboration, sustainable finance and recovery? What do you think of the features? How do we do this?
Well, I think one of the things actually that the sustainable finance community has been particularly good at is actually a very sophisticated development of global cooperation on a sort of alliance of the sort of coalitions of the willing. And indeed, the EU has set up its international platform on sustainable finance. We've got the central bank network. We have this coalition of finance ministers and so on. And I think the importance of the international collaboration, I suppose, is one based on need, particularly in this crisis. Developing and emerging economies are hardest hit, particularly in terms of workers and communities in informal sectors, migrant workers around the world, workers in garment sectors who have been laid off because of the reduction in demand for clothing in industrialized country markets. So we know actually that this is, I mean, it is not just a nice to have, actually it is really important to have. Again, if I could give you a sort of maybe a lesson from history, again, last time financial crisis, 2008, 2009, governments were introducing their national stimulus plans. There was, I think, a degree more coordination, but still there was actually no connection between those national stimulus efforts and this parallel process of the climate negotiations. And at the end of that year, 2009, there was the failure at Copenhagen. And I think, in a sense, we've got to be smart this time, recognize actually we are much further advanced. We're in a worse position in terms of emissions, but in terms of the technologies and business models and commitment, we're in a much better condition. And actually we can make a connection between often these very nationally focused stimulus plans, or regionally focused as in the case of the EU, and the global focus. So I would say one of the things that would need to be incorporated in, let's say, Europe's recovery plan as a whole is a particular focus on actual stimulus for developing and emerging economies, particularly linked to their transition, with a goal to show that by the time we come to the COP, we have well exceeded the famous 100 billion flows, north-south flows in climate finance. So that would be a sort of a confidence building measure that at this time of crisis, actually we recognize that for very good economic reasons, it's important to invest in those economies, but also that we are providing through the North, in particular, I think here in the European Union, particular injections of capital to developing countries who, as we know, are most vulnerable, least resilient, and have least access to capital.
Helena, can this work in your framing earlier of the public-private collaboration?
I think definitely. I think so. And I think that it's very interesting because as we see this development of these international networks on sustainable finance, we see for the very first time private sector working alongside with supervisors or public sector on those spheres. So for instance, IOSCO last year had held the first conference, at least that I know of, where it was all around sustainable finance, where it has created 2 working groups and invited us, private investors, to be part of that conversation. AMF, this is the equivalent of the FSA here in France, has created this committee, and part of that where we discuss all regulations and situations, and we provide them with advice. I mean, some years ago, that was totally unthinkable. In a way, I mean, that the EU or the Commission creates that type of expert groups, it's more, let's say, more common, maybe not in the area of finance. That's been pretty new. We could say that financial, sustainability has made it into mainstream financial regulation, but to see that in some areas where, I mean, come on, the FSA, the equivalent, AMF, that was something unbelievable. I mean, for me, it's something really new. So we are starting to see much more collaboration, and it's really good because they also can understand the barriers that we have here, and sometimes they're not exactly the ones that they thought of. I wanted to make one point actually that thought that I lost at some point in the past, which is I think that the time is ripe in the sense of if something we need to do with this crisis is that it is to use it as a catalyst for change. And what I mean is that there are certain type of structural changes that in other conditions, there's no way they could happen, yeah? And just because we are in this very particular situation, people, and I mean from citizens to to other stakeholders are willing to do. And one of the most probably more interesting ones, it's in EU budgeting, yeah? There's this whole thing about North-South. After the financial crisis, I mean, you know, the North, yeah, coming from Southern, one of the peaks country, you know, it was a rage about, you know, bailing out the South. It's like, you know, what is that? You know, these people are sort of wasting, yeah, the time. I'm not going to get into, you know, whether or not that was right. I think we need to understand both positions. But what is interesting is that now the same people, you know, a lot of people of public opinion, I wouldn't say everyone, unfortunately, but a lot of them, they're understanding that this is an exogenous crisis, that this comes from us.
Exactly.
And that it needs a joint response. And that is for the good of everyone. This is the very first time that maybe at European level where we are ready to make some of the hardcore but really necessary structural changes. And it's not only on budgeting, it might also need on some of the, you know, more profound structures, you know, and governance. So it is, we need to make the most out of the situation.
Very good point. We're in the last few minutes. Nick, do you think, just before we get to wrap up comments, central banks was the other area, sovereigns, policy banks, and you've done a lot of work with central banks over the last few years. It's been amazing how they have stepped up during this crisis. I mean, we're seeing QE from emerging market central banks, which no one thought was possible at the moment. We're not seeing green QE yet. Are central banks doing enough? What do you expect them to do more of?
Yeah, I think, again, building on all the examples that Helena has just been setting out, I think probably the sort of engagement of central banks through groups such as the Network for Green the Financial System on sustainability and climate has been remarkable. And I think what we've seen, again, that central banks have stepped forward in terms of providing liquidity to the market in the crisis, in terms of supporting that through a whole variety of different mechanisms. I think there is a recognition that actually sort of climate factors will need to be incorporated in this. And I think this is a very fast moving development. Sadly, I think this crisis will go on for a while. And I think there are a number of areas where, again, central banks can sort of think about how the funding and liquidity they're providing to markets can be aligned with the goals we've been setting out earlier, climate change and so on. Firstly, to make sure actually that they don't carry climate risk, material climate risk on their balance sheet. If they're buying assets, they need to make sure actually from a materiality point of view. Secondly, they need to make sure that they are not stoking up instability in the institutions they govern, the financial institutions, other institutions, by providing capital. They need to think about the stability of the system as a whole, the resilience of the system as a whole. And also they need to think about, are there opportunities here? Are there opportunities for actually accelerating the pace of green finance? So I think that's very much a live discussion. And I think there'll be more focus on sort of central bank asset purchase programs, collateral frameworks, and so on. And there'll be, I suppose, tough issues. I think Helena was focusing on this, about how we take forward approaches which we were designed for normal times. So let's take climate change stress testing, recognized as being a key aspect of understanding long-term risks and so on. How do we keep that momentum going forward at a time of immediate crisis? Yeah, so there are some tough issues. I mean, because obviously people are focused on the immediate crisis, but we don't want to lose that momentum in terms of understanding the climate risks as we're focusing on the immediate.
So we need to wrap up. I'd like to keep going on that particular theme because there's so much to unpack. But today, folks, this is a starter for a conversation. Helena, parting thoughts for our audience about clearly a revolution we need, and maybe a revolution we're in the middle of actually having around all of this. What are your parting thoughts for the audience going forward and what they can do?
I would just say, I mean, I would like to reiterate a couple of points that we've made. First, it is time to listen to scientists. it is really time to listen to science. And if I may, and inspired by Nick, I thought about this quote from the leader professor from Oxford. Is one of the the authors of the IPCC report of 1.5. And he said, let's get this on the table right away, without mincing words. With regards to the climate crisis, yes, it is time to panic. We are in deep trouble. And I think that this is what we need to listen, and the message will be the time is right for a change, and we need to use this crisis as a catalyst to change our economic model and to turn it into a low carbon, more environmentally sustainable, and much, much more inclusive and fair.
Thank you. A bit like listening to the scientists on January 5 who started trying to say there was a virus, same principle. Time to listen.
Exactly. It's time to listen. Yes. We know how to do it. Now it's time to act.
Nick, parting thoughts.
Well, I think as you raised the issue of purpose, and I mean we've had about 100 people on the call today, and I think all of us need to think about sort of what we can contribute in terms of delivering a sustainable recovery in the coming months, and how would we feel that we had made a real contribution within our professional arena in the companies or institutions we work with, but also to this wider transition that we have such potential now to accelerate at this time of crisis and human suffering. So I think that's a real challenge for all of us to think about our role. And if I may go back to John Maynard Keynes, again, this is a big Keynesian moment. And when he was writing at the time of the 1929 crisis, he wrote in his plan for recovery that we should be bold, we should be open, we should experiment, we should take action, and we should try the possibility of things. And I think, in a sense, in the sustainable finance arena, that's exactly the spirit we should sort of encounter the next phase of this crisis and building the recovery.
Thank you, Nick. Thank you, Helena, for joining us today for this conversation. Folks, thank you for joining us online. There will be recordings available. You can find them on climatebonds.net webinars, and you can also find them on Google Podcasts, Apple Podcasts, and Spotify Podcasts. This podcast will go live sometime next week. Join us for future ideas sessions in coming weeks. The calendar will be available on that same page, climatebonds.net/webinars. We're in the middle of a crisis. We have to learn from this crisis how to deal with the overarching enveloping crisis that we're careering into without taking adequate action, the climate crisis. They're joined. It's the lesson for us to be able to take to make sure that we can create a sustainable future, which will be a sustainable finance revolution. Thank you, everyone. Until next time.